A major headline just dropped from S&P Global Ratings about India's economy. So let's break down exactly what this means, why it's happening right now, and what could be coming next. And look, this isn't just some minor update. We're talking about a really big deal here. To give you some perspective, this is the very first time S&P has upgraded India's sovereign rating in almost 20 years. I mean, a whole generation of economic activity has gone by since the last time this happened. And what's really striking is just how long we're talking about. India's rating has been stuck at BBB- since way back in January 2007. That long period of stagnation is exactly why this recent bump up to BBB is making such huge waves.
All right, here's our game plan. First, we'll unpack what this landmark upgrade is all about. Then, we'll get into the reasons behind that BBB rating. After that, we'll explore the real-world ripple effect, and finally, we'll take a look at the road ahead.
Okay, let's dive right into Section 1, a landmark upgrade. Before we go any further, let's make sure we're all on the same page about the core concept here.
So what exactly is a sovereign credit rating? Well, the simplest way to think about it is this. It's basically a credit score, but for a whole country. It's an independent grade that tells investors how likely a nation is to pay back its debts, and, how risky it is to lend money to them.
And, this has been a real point of contention for years. In fact, get this. Back in his 2020-21 economic survey, the Indian government actually published a chapter with this title, arguing that its rating just didn't match up with its economic reality. So for them, this upgrade isn't just good news, it feels like a long overdue correction.
So that really brings us to the big question. After almost 2 decades, why now? Let's dig into the 4 key reasons S&P gave for finally making this change.
S&P's decision really rests on 4 key pillars. You've got a serious commitment to fiscal consolidation, really robust economic growth, smart debt management, and a good handle on inflation. These 4 things together built the case. So let's zoom in on a couple of the most critical ones.
First up, fiscal consolidation. I mean, just look at that drop. The government has laid out a super clear and aggressive plan to slash its fiscal deficit, all the way from a high of 9.2% of GDP during the pandemic down to a target of 4.4% by 2026. That kind of clear roadmap gives a rating agency like S&P a whole lot of confidence.
Next up is just the raw power of economic growth. While a lot of other major economies are kind of slowing down, India is projected to just power ahead, expanding at an impressive 6.5%. That pace makes it one of the fastest-growing large economies on the entire planet. And that kind of growth, well, it makes managing your debt a whole lot easier.
And rounding out the picture were 2 other big strengths. S&P pointed to a clear, long-term strategy to bring that debt-to-GDP ratio down to around 50%, and they also gave a big nod to the Reserve Bank of India for its successful track record in keeping inflation pretty low and stable.
Okay, that brings us to our 3rd section, the economic ripple effect. You might be thinking, all right, an agency changed a few letters on a report. So what? Well, let's talk about why this single rating change actually matters in the real world.
It creates this incredibly powerful domino effect. See, a better rating means lower perceived risk. That allows the government to borrow money at cheaper interest rates. This improved outlook then attracts more foreign investment. And here's the kicker. Because the government's borrowing rate is the benchmark, it also means Indian companies can raise money more cheaply, especially from overseas lenders. So let's put this into a global context for a second. Where does this new BBB rating place India on the world stage? Well, it puts it in a peer group with countries like Mexico, Greece, and Indonesia. Now, it's still a ways off from the top-tier AAA ratings of places like Germany or Canada, but it's a solid investment-grade position. And that leads us perfectly into our final section, the road ahead. Because as fantastic as this news is, there are still some pretty significant challenges and a very clear path India needs to follow if it wants to get to that next level. So let's be really clear about the reality of this BBB rating. While it is a hugely important step up, it's still the lowest notch in what's considered the investment grade category. It's like getting out of the basement, but you're still on the ground floor.
So what's the biggest hurdle to the next upgrade? Well, S&P has laid out a crystal clear benchmark. India needs to get its combined fiscal deficit,
That's the central government and the states all rolled together, below 6%. The challenge? Right now, India's reality is closer to 7.8%. That is a pretty significant gap to close.
And beyond that one primary hurdle, a couple of other challenges are still on the radar. That high combined deficit is, of course, a persistent concern, and like any emerging economy, India is still vulnerable to big global economic shocks and volatility that could throw things off track.
So, what's the game plan from here? The way forward is actually pretty straightforward. Number 1, stick to that fiscal roadmap religiously. Number 2, keep pushing ahead with major structural reforms in areas like land and labor to make the economy more efficient. And number 3, create a stable environment that really encourages private companies to invest and drive growth. And all of that leaves us with one final big question. India clearly has a roadmap and some new momentum, but it's also facing very real hurdles. So will this long-awaited upgrade turn out to be a stepping stone to even greater heights, or will it become a new plateau? I guess only time will tell.